Q4 is a tricky one generally because the loss ratios tend to be a fair amount better than the other, almost all three of the other 3 quarters, notably better. Historically, they have been. We've had 1 or 2 exceptions with freeze storms, and so we're somewhat cautious. There's an opportunity to have just another great quarter for sure. And then we've also built in an assumption that will be highly likely to happen, which is the pace of our growth spend to set us up for continuing accelerated growth. If you look at our growth rate through the quarters of this year, you've seen that year-on-year growth rate nudge up each quarter consistently through the course of the year. And so we're able to do that at the same time as we see loss ratios make great improvement. So that combination is something that's led to a great year-to-date period, and the Q4 numbers we hope will come in as expected or better.
So those are some comments, bullish comments on Q4 from Tim, the CFO, on the Q3 earnings call. And in this video, I want to share my thoughts on why I believe Lemonade's Q4 results are going to be very, very strong. Of course, nothing on my channel is personal financial advice, even if they post strong results. How the market interprets and absorbs and reacts to those results is much harder to necessarily determine, but I believe from Lemonade's perspective, it's going to be a very strong quarter. I actually talked about this on my Patreon a couple weeks ago, an exclusive video there. I plan to do more on my Patreon this year with upcoming stuff, behind the scenes stuff, early access, early thoughts on things sort of stuff. So if you want to support the channel, you can join my Patreon. There's lots of people who have joined there. I really appreciate that. And I'm going to bring more valuable content there. But why do I think this is going to be a good quarter? A couple clues is related to, well, first of all, Tim's comments that you just heard. It also could be a very good quarter based on the guidance they gave for Q4, as well as the guidance they gave on the amount of growth spend they'll spend in Q4. And then the other reason is because Daniel, the CEO, made some bullish comments on an interview that was released just a couple days ago, but was recorded likely at least a month or month plus ago, where he said,
and yes, we're approaching, in just a few weeks' time, we should pass the $1 billion mark in terms of our premiums overall, not for car.
A lot of reasons why I believe this could be a really, really strong quarter. First of all, if I just ignore those comments of Daniel and look at only my model as if I had never heard those, then, they're giving a guidance of -29 to -25 adjusted EBITDA loss, which is quite solid for where they're at right now. But the interesting thing is that includes them having a gross spend of roughly $35 million in Q4, which is a lot. If you look at the gross spend of 2024, I have exactly $120 million right there, including $35 million in Q4 alone, which is a lot. The Q3 was a major growth spend quarter when it was just under $40 million. So another $35 million in Q4, where typically Q4 they spend less money because advertising is more competitive and more expensive, and the customers they're trying to acquire generally are not as easy to acquire for, or not as efficient to acquire. So usually they're spending less, but they're going to spend $35 million and still get to that guidance of -29 to -25. So how can that kind of square and make any sense? Also, another form of very subtle guidance from Investor Day 2. Shout out to Aaron, who counted and measured the pixels on this one slide and said, hey, for adjusted gross profit for Q4, Lemonade's actually expecting, this gray box here, about $65 million. And he told me later in a message, it's probably a little bit less, more like $62 million, somewhere in that range. But it's another clue of what they're expecting for Q4. Now, again, if I ignore the comments that Daniel made about passing the 1 billion mark of premiums and just focus on where I might have predicted the premiums to come in for Q4, their guidance was 940 to 944. They usually beat their guidance, especially their IFP, or enforced premium guidance. So I was expecting about $959 million for Q4 by my calculations. Trick, though, is the gross loss ratio, your loss ratio, right? So let's say it was, if it's 70% loss ratio, Now your adjusted gross profit, which we're expecting about 62 million or so, it's only 51 million. And then with that 35 million growth spend, that really hurts your adjusted EBITDA, and your adjusted EBITDA comes in at 34 million, minus 34 million. It's a long ways off from where they guide, and typically they hit their guidance. I mean, they basically always hit their guidance or beat their guidance, and sometimes handily beat their guidance. So 34, it doesn't square. It doesn't make sense. But I think based on Tim's comments for the loss ratio, I think that could be pretty low. It might even be like low 60%. And I made this comment on Twitter, on X, a few weeks ago. It said, home loss ratio is probably still above 100%. Well, renters is probably in the 40% range for their loss ratios. Car is, for new customers, is probably less than 80%. It was 92% in Q3, but without a one-time adjustment from Metro Mile, it was about 82% is what they said. And my guess is new customers that are coming in the door are probably in the 70% as they come in with the latest greatest rates. So if Lemonade keeps non-renewing the very worst home customers, adding renters, pet, and car customers, the gross loss ratio should continue to improve from 73% in Q3. I think it'll be less than 70% for Q4, possibly even less than 65%. So if we put in 63% for that value for Q4, that gets us up to a adjusted gross profit of 59 million. So I think it's within, the tolerances of that graph that Aaron shared, where he had just sort of a rough measurement and clearly a bit of a rough guidance from management. And then also your adjusted EBITDA drops down to minus 26, minus $27 million range. And then also your adjusted EBITDA drops down to the minus 26, minus $27 million range, which is right in line with their estimates for Q4. So right away, I think if you had that kind of result, top line beat, a loss ratio that's that low, adjusted EBITDA loss that's coming in that low as well, then I think that's going to be seen as a very strong quarter for Lemonade. Again, how will the market react to that? I feel like in the past few years, we've had many quarters that were strong, positive quarters, and the market reacted neutral or even negatively. And then it wasn't until this Q3, we had another strong quarter, and the market, of course, reacted very positively. Now back to Daniel's comments about them passing 1 billion of premium in just a few weeks' time. I'm very confident that this interview was done closer to Investor Day back in November, because Daniel said this comment right here.
We had an Investor Day this week, but we had an Investor Day 2 years ago.
And the host of the show made a comment about how she had just interviewed CEOs of Upstart, and that video on their channel was released November 25th. So I'm nearly 100% sure this was filmed quite a while ago, back in November. It's really just a question of, what does Daniel mean? Did he say in a few weeks' time? Did he mean literally, 3-4 weeks' time? And in Q4, we're going to beat the $1 billion range and have a huge top line beat on what the in-force premium guidance was for? Or was Daniel just sort of talking, saying, yeah, in a few weeks, and maybe a few weeks means 10 weeks, 12 weeks, extended out. We're close to $1 billion. In a few weeks' time, we're sort of close to there. And maybe that means, in January or end of January, they're going to hit that milestone. I'm not sure which one is the case, but let's just look at it as if Lemonade could pass $1 billion in IFP this quarter. Let's just assume that would be maybe possible. And it's not totally out to lunch, because we know they're ramping their car product. Their car product has a premium per customer of, over $1,750. Average premium per customer is $384 otherwise. And you have 2.3 million plus customers. So within your existing base of customers, there's going to be a lot of low-hanging fruit of people that want to cross-sell up to car and could add a ton of premium really quickly, really easily. And then there's also going to be customers in the marketplace that are aware of Lemonade, know about Lemonade, maybe had Lemonade renter's policy in the past and don't anymore, but now see that Lemonade's available for their car needs and sign up for car. What I'm trying to say is the marketing unit economics around car, we really don't know very well. It's not there's a bit of evidence we've had over the years that Lemonade's given us, but there's not a lot of clear evidence of how that will go. And it could be really, really impactful. I mean, intuitively, it is impactful if you have customers paying $384 average and then car is, $1,700 plus. Being able to cross-sell those customers or customers in general, it's obviously going to really move the needle. So to get to the $1 billion of IFP, though, the way I'm kind of squaring that there, and this calculation I have has some adjustments for premiums increasing, for canceling out non-renewing home customers to get to the 959 range. The way I'm moving this number up to $1 billion is I'm saying, hey, first of all, what they're spending per a customer they acquire is going to be better because there's going to be a whole bunch of car customers that are just waiting in the wings, and they can market to car customers and get these car customers, and car is going to be a competitive market, but they're hitting and gaining the lowest hanging fruit customers. So I'm moving this value down of customer acquisition costs, so how much they're paying to acquire each customer they gain, from $216 down to $150. If we move that to $150, that already moves up to $979 of IFP. And then if I scroll down here in my model, I have a line that says new customer premium per customer, which I had at $353 per customer. Again, there's some nuance here. I won't go into all the details of how you can think about this, but if I move this up to not $353 but $450, so basically saying there's more new customers coming in the door that are car customers. There's more customers that are flipping over their policies and gaining car customers. If you flip that to 450, and now you're at that $1 billion mark of IFP. You're also with the 63% gross loss ratio, your adjusted gross profit comes right in where Aaron measured it at $62 million, and adjusted EBITDA of minus $24 million, which is just a little bit of a beat on their guidance. You can also look at how much they're spending in customer acquisition in their overall growth spend. So of that $35 million they're spending, they're gaining about $3.82 of IFP for every dollar they spend, which is quite good. You can see back in 2023 they had higher values, 3, 4. That was in large part due because they're spending a lot less on the variable growth spend there. They only spent $54 million, $55 million, and now they're going to spend more like $120 million this year. So to still have that high of a value in Q4 would mean, hey, the reason you're getting that is because you're getting so much of the cross-sell from car customers and new customers coming in the door that are car customers. So this is the metric we really don't know with a ton of confidence, but giving those couple inputs, you could have that potential kind of top line beat, bottom line beat all around if you believe Daniel's comments that they're going to pass $1 billion this quarter, and then he wasn't sort of meaning, next quarter or January, February sometime. If that happened, they were in that $1 billion range, I think, again, I don't know how the stock would react, but I would imagine very positively. At least it would be an outstanding quarter going from, Q2 to Q3. They spent even more on growth spend, and they went from $839 to $889. So they gained $60 million of net gain of IFP between those quarters. They go from $889 to $1 billion. You're talking 110. And again, it sounds maybe too good to be true. Maybe it is. I don't think it's impossible though either, because in Q3 they had more home non-renewals. They had most of them there. They had less now in Q4. And then, of course, like I said, all the metrics around how car ramps and cross sells, we don't really know how that's going to look. I hope you got value out of this. I'll be doing some other videos for 2025 and beyond. I have down below in my model a whole breakdown of all the different types of policies by product line and where they're coming in and the number of customers. I'll be revealing more of that to my Patreon and then also to the larger audience here as well. So stay tuned for all that as we look out into 2025, 26 and beyond, really showcase where they could potentially head. Thank you so much for watching, and remember, it's in the bag.